it's Trend Trader here. Welcome to another episode of Market Analysis and Trade Update. Today we've got a couple of companies that we'll be looking at for the week of the 26th of October 2020. And as usual, we're going to start with our risk disclaimer. Everything that is shared on this channel does not constitute financial advice and it should not be treated as such. If you happen to use any of the material that is presented on this channel, Trend Trader will not be liable for any profit or losses that result from the use of the material that is presented on this channel. Okay, and we'll also like to ask you to please subscribe to our channel, click on the bell icon, and if you've watched our videos and you like a video, please click the thumbs up. Thank you. Okay, this week we've got a couple of stocks that we'll be looking at. There are some stocks that are from the bank sector, but we've also got stocks from the consumer good or retailers and other different companies. So let's start. The first company that we're looking at is ABSA Group. We saw that ABSA has been trading in a range, and then this week it attempted to close above the 200-day moving average. So that gives us a buy signal on this stock. Of the banks that we'll be discussing today, ABSA is the only stock that closed above the 200-day moving average yesterday. The other ones are about to test it, but ABSA just closed above it. So that gave us a buy signal. So we'll be adding ABSA into our portfolio. And as usual, the stop is close below the 200-day moving average, but since we're going to measure it with the ATR, the average true range, it's possible that we might have our stop just below 92 Rand, and then from there we expect ABSA to trade higher, at least up until it reaches the resistance that is somewhere around 130 Rand per share. So yeah, as you see that even with the stop just around 85 Rands or so, it still gives you a favorable risk to reward ratio. But our stop is going to be a bit tighter than that because we don't want our stop to exceed minus 10% per share, which represent 1% of our 2% of our total equity. Okay, the other company that we're looking at is Firstrand. Yes, yeah, as you can see, Firstrand as well, it went on to try and close to the 200-day exponential moving average, but it barely reached it. It didn't close above it. So this one is on our watch list. We're not buying Firstrand, we're only buying ABSA. But we will be monitoring the situation, what is happening with Firstrand. Does it have enough strength to edge higher and then eventually close above the 200-day moving average? If it does, we will also buy that stock, expecting it to at least reach 54 Rand per share. And as usual, the stop loss will be below the 200-day moving average, maybe 1.5 times ATR below the 200-day moving average. And also another bank that is showing some move is Standard Bank. As you can see, also Standard Bank yesterday, which was the 23rd of October, it also traded a bit higher, and then it touched the 200-day exponential moving average. But if you zoom in, you can see that it still closed below the 200-day moving average. So we will wait for it a bit that it closed above the 200-day moving average, which will then give us a buy signal. And if we get that buy signal, we will buy it. Well, Standard Bank is a big company and it regularly pays big dividends, but we don't know, since there was an announcement from the South African Reserve Bank that some banks, they can withhold the dividends to ensure that they have some cash flow. So we don't know what the future has in for us, but in the past, Standard Bank has been one of the best profitable banks. So now to other companies that are outside the banking sector. We are looking at Curro Holdings. Curro Holdings again, it's a private company. It's been performing okay so far, as it has been consolidating all along. It's been trending lower until it reached the lowest at 460 per share, and then started to consolidate near the 50-day exponential moving average for quite some time. Eventually it broke above, and then now it just broke above 200-day exponential moving average at about 10 rand or 11 rand per share. So we'll be adding this position into our portfolio and holding it, and for as long as it's trading above the 200-day moving average, we will be holding it. At this moment, this is a perfect place to buy. It's close to an area of value. Your stop loss would be closer to your buying point, which will give you a favorable risk to reward ratio, something that we always target whenever we're buying a stock. Also looking at Distel Group. So for the past 3 days, the company just started to shoot up nicely. As you can see, it's been consolidating since March, trading not necessarily in a range, but it has been consolidating. And then for the past 3 days, it started trading higher at a noticeable high volume. We like the fact that the volatility is still low. So now, if it closes above 85.50 per share, we will look into adding this stock into our portfolio as well. And then we don't know how high it will go. Probably it will reach 99 rand or 100 rand per share, or even trade higher. But at this moment, it looks interesting as it's closer to the 200-day moving average. So that's another company that is on our watch list. If it cracks and trade above the 200-day moving average, then we'll add it into our portfolio. Previously, we spoke about Mediclinic. We mentioned that Mediclinic, it attempted to break above the 200-day moving average, but that breakout, it failed at that time because it came back again and traded below. We had a position. We still holding that position because it didn't reach our exit level, and then now it's back again above the 200-day moving average. So we're still holding Mediclinic. We expect it to continue to trade higher. We will see if the 50-day moving average will cross the 200-day exponential moving average. If it does cross above it, that's another bullish signal that you can use. It might show that the uptrend is intact and probably it's getting strong. So yes, we also have Mediclinic. Another company that caught our interest yesterday is Merafe Resources. As you can see, Merafe has been trending lower for quite some time. As you can see, if you go back to about June 2018, it's been trading lower. And then in March, it seems like it reached its bottom, and then it tried to consolidate for some time. So yesterday when we were scanning the market, the price was above the 200-day moving average. But as you can see, after market close, it closed at 50 cents per share, which is below the 200-day moving average. So what we'll be doing, we are keeping this stock in our watch list for it to see if it closes above the 200-day exponential moving average. If it does, we buy. If it doesn't, then we continue to stay on the sidelines until it closes above that. But yeah, it's an interesting when you start to see some nice setups, even in some companies that are trading below 1 rand. Well, they might be easily referred to as penny stocks, but we don't trade based on emotions or about how we feel about a stock. If the stock is showing some signal that you can use as an entry point, then we take the trade. So we have Merafe on our watch list as well. And then back to retailers, as you can see now, we have Mr. Price Group. Mr. Price Group has been trading lower. It was on a downtrend for quite some time, and then it bottomed in March, then started to consolidate. Well, we can't say that it tested the 200-day moving average at this level, but as you can see now, it is currently testing the 200-day exponential moving average around 140 rand per share. So we are monitoring that stock as well. We are waiting for it to close above the 200-day moving average, and then we're going to buy it. We're going to add it into our portfolio if it does. But if it doesn't, we continue to stay on our sidelines. As you can see, there are a lot of stocks that meet our entry criteria, so we can't really focus on one stock. If it doesn't perform the way we expect it to perform, then there's no need to park our capital in a non-performing stock. But by the look of things at this moment, Mr. Price Group is interesting, so it's on our watch list as well. Anything can happen. Whenever we post a market analysis video, during the week we go through our watch list, we check, well, basically we almost check every day to see which of the stocks that are on the watch list that have actually met the buy criteria. And if they've did match the buy criteria, then we buy those stocks. So it can happen that the week can end without us adding a certain stock, but it is less likely to happen because of the market momentum. As you can see, the attempt towards the 200-day moving average, we've got 2 green bars on the volume indicator, meaning that there are more people who are putting money into the stock. So if that momentum continues, we expect the price to start to trade high. But we don't just go in before the market does certain thing. We want the price to first show us that it can trade above the 200-day moving average. Then that's when we can buy. Yeah. So another stock that's in retail is Pepco. Pepco have been trading in a range for quite some time. We don't know if it's related to the Steinhoff saga, but yeah, it's been trading in a range, then traded a bit lower. As you can see, it's been trading in a range as well previously. So now we wait and see, but it broke above the 200-day moving average. What we are not sure of is whether the stock is now going to break out of this range that it's been trading on. But if it does break out, we would expect that it will trade a bit higher. It might go up and then maybe, just maybe, come back to retest the breakout level. If it does come back to retest it, we expect that the previous range will act as now the support, and then the stock will continue to trade high. But we are trend followers, so we don't do any of this prediction of what the stock might do. So we just wait and look at the price action. The price action will tell us what is happening. Yeah, so we don't predict, but at the moment, as it looks, the stock is at the resistance level of this range, and it's also above the 200-day exponential moving average. So since we are not trading chart patterns, we are only trading based on moving averages. To us, this is a buy signal, so we'll be adding Pepco into our portfolio. It's just that we are aware that it might have a bit of resistance here, but if you look at the volume, there is a bit of strength and the candles are a bit longer. As we mentioned in some groups where we participate, if you look at the shape of the candle or a bar, depending whether you use a candle or use a bar, there's some information that you can get there. So a longer candle indicates that there is a momentum, irrespective of the direction, whether the candle is green or red. Okay, in our case, we prefer blue over green. But whether the candle is moving up or it's moving down, if it's longer, it shows that there is a momentum in that specific direction. And then for that reason, we are somewhat confident that Pepco broke out of the 200-day moving average with the momentum. And for that reason, we are adding Pepco into our portfolio. Another retail stock that has been on our radar for quite some time is Woolworths. We mentioned previously that we had a buy signal at this point, and then it reversed a bit, but it found support on the 50-day moving average. Within a number of days, it came back and then it started to trade above the 200-day moving average again, which gives us another buy signal. So for everyone who missed the entry at this level, now it's another opportunity to buy Woolworths again. As you can see now, it's trading at 40 Rand per share, which is a bit stretched from the preferred 36 Rand. But I mean, life happens. You don't see everything unless you are sitting watching the chart all the time during the market hours. But not everyone has that time because we've got other tasks that we need to be busy with. But as it is, Woolworths is near the area of value. We already have Woolworths in our portfolio, but for those who don't have it, now it's another time for an entry, just in case you missed the buy recommendation that we had about 2 weeks ago. And then the final stock that we're looking at is Discovery Holdings. So we discussed this stock in our previous market analysis and trade update. We mentioned that there are a couple of scenarios that we are looking at because we had a position that we had taken around 115 Rand or so. So we closed that position when the stock closed below the 50-day moving average. In the previous video, we mentioned that there are a couple of scenarios that can happen. The stock can find support at the 50-day moving average, come back and trade higher, or the stock can go down, reach the 200-day moving average, and then find support there and trade higher. And then we mentioned the worst case scenario whereby the stock breaks lower the 200-day moving average, of which we mentioned as a scenario that we don't want to see. So now, as it is, the stock played scenario number 1, whereby it found support on the 50-day moving average, and now it's trading again higher. It continues with the uptrend that we saw previously. So now we're going to jump back into this position. Fortunately for us, we exited this position with a 6% return, which was low, but it's enough to cover the fees to exit that position and to re-enter this position as well. So the fees are going to be insignificant for this trade, as the previous trade was profitable. Unlike if the trade was a loss, then yeah, it would be a different story. So now we are going back to Discover. Just as a side note, yes, we do use the 200-day exponential moving average to make our buying decisions. If the price is trading below the 200-day moving average, then we don't touch that stock. No matter how great the story is, the fundamentals, balance sheet, debt, everything that is associated with fundamental analysis, we just don't touch that stock. But as soon as the stock is trading above the 200-day moving average, then it gets our attention. We start to look at it, and if it meets our buy criteria, we add it into our portfolio. Theoretically, we hold that stock for as long as it is trading above the 200-day moving average. But since we are using a trailing stop, the trailing stop, I mean, as you can see here, the stock started to consolidate. The current swing high wasn't above the previous swing high. So now anything can happen in the market. You can't say that because the stock is trading above the 200-day moving average, it will hold, because I mean, every stock that went down at some point, it was trading above the 200-day moving average, then started to consolidate or distribute, as some people attribute it, but it can start to distribute and then it starts to fall. So it's difficult to tell whether the stock is having just a minor healthy pullback or it's a beginning of a change in trend. So that is why whenever the stop level is hit, you exit the position. Then if the trend resumes, then there's nothing wrong with going back to a stock that you've just exited, because at the end of the day, it's all about preserving capital. Fine, if you feel like jumping in and out of the stock is gonna eat most of your capital in fees, there's nothing we can say there. It's your decision to make, but our decision, whenever the stop level is hit, we exit. Yes, we are aware that there are fees. Sometimes the fees could be higher, but sometimes the losses could be even higher than the fees that you pay. So we prefer to sacrifice fees than to sacrifice our capital holding a losing position. Yeah, so that's it for this week. As we mentioned that we are looking to buy ABSA. We'll be adding ABSA into our position. Also, we'll add Curro. We are monitoring Firstrand. We already have Woolworths in our position. So, but that's another stock that you can add. On our watch list, we've got other banks, Firstrand and Standard Bank, and also we are looking at Merafe Resources and Mr. Price Group. And the position that we exited on Discovery, we will be buying that position once again, because now it's showing that it's resuming with the uptrend. And yeah, that's it for this week market analysis. Happy trading, happy investing. We hope that whichever strategy you use is in line with your long-term vision of participating in the market. For those who haven't subscribed yet, we would like to kindly ask you to please subscribe. And those who are already subscribed, if you like any of the videos, just give it a thumbs up so that it can be recommended to other people who are looking to analyze the market using technical analysis, specifically trend following. But we've got other videos where we discuss other stuff, not necessarily the trading technique or market analysis. We believe that some of those videos might be helpful to some of the viewers. We've got videos that discuss asset classes that are available to South African investors. We also have a video that speaks about value investing if you want to know what kind of information that you should be looking for when you analyze a stock, especially if you're looking at the company's financial statements. We're just going to call them financial statements. We know there are three kinds, like balance sheet and what, but we're just going to say financial statement because finance is not our field of expertise. We just trade because it's easy to trade with the chart. And that's it for this week. Thank you for coming once again. Thanks.